So, what's good, my people? Welcome to Higutsili, the place. Welcome to the upgrade, and the place where you come to lose all your money. So, today I'll be sharing a simple strategy I've been stress testing since 2022, and I want to show you how I've used it to make money. I've lost money with it. There's no 100% strategy, but I've stress tested this one, and it's really simple. And this is for my scalp traders. So if you don't scalp, if you're a swing trader, like you hold trades for like more than 2 hours or even like 5 hours, I'm sorry. Here we are scalp traders. We only do trades for like 30 minutes to 1 hour maximum. Yeah, we like to take our money and go. So this strategy. So remember to like and sub, by the way. This strategy is called supply and demand, as you can see here. Supply and demand. And I'll be showing you. So I'll also go to the charts in TradingView and show you, like in real charts, how this strategy actually looks like in the real markets. But right here, I'll be showing you like the rough, sketch. So this strategy is supply and demand, as I said, and it's just basic economics, as you may want to know what supply and demand is. Just basic economics, like when there's demand for something, the supply is very high, and that is visible in like the market, like in the charts market. That is can be visible. It's a pattern that is very visible and can make you profitable. So yeah, so the strategy goes like this. There's rules for them. There's rules first. The first rule you have to do is this strategy. They have to be like broken highs. You have to see highs that have been broken, and just before you actually start, looking for confluences for this strategy, you must check the news. This strategy does not work when there's news, so you must check your Forex Factory, and I'll be giving more details on like Forex Factory and like a more detailed version of this supply and demand, strategy. So you have to see broken highs. This is a high, this is another high, and this is also another high. Sorry, let me start over. So let me just give you like a basic explanation. So this is a high, this is a high, and this is another high. Okay, and this is what we call breakout structure. This structure here has been broken by this structure here, this high over here, and this high over here has been broken by this high over here. It's the same with lows. When you see like a lower low, a lower low, and a lower low, it means this low has been broken by this other low, and this is just a demand side of this other one, so when you see these highs have been broken, you come over here is where you start, like you must see like a high has been broken, so you can, that's the first confluence, breaking of structure break. So when this high has been broken, you come over here. It doesn't have to be like multiple highs being broken, but it has just to be there must be like a high that have been broken. So you come here where I've circled, and you check for the last candle here that maybe was, that you check for the last candle that was red before this high over here was made. Before this high over here was made, you check for the last candle that happened over here that was not a bullish candle that indicated the move up. I don't know if you understand me, but I'll go to the TradingView, you'll understand more. So you come here, check the last candle, draw your support zone over there. Draw your support zone, your demand zone, since this is like not a downtrend, an uptrend. So you check for you draw you draw your zone over there, like that, and wait for the market to come back to your zone. So this place where I've shade is your zone, and that zone you make it based on the last candle. That was the last red candle that was made here, and from the wick to the body of the bottom of the candle, you draw like a rectangle. You use a rectangle tool and draw like that. So once you see that, once you draw that, you wait for your price to come, and here is your price. When your price comes over here, this is where you take your trade. When the price comes back to your zone, this shaded zone over here, when the price comes back there, that's when you take your trade. But there's also conferences to like take your trade. You'll understand more when I get there. The candle that dipped into the zone, the first candle that dipped into your zone, you take the second candle next, but the second candle has to engulf the candle that dipped in your zone. Do you get me? Has to close like above the last candle where the candle that dipped in your zone was last time. So that when you see that, then you take the trade. You see? Let's go to like a real example that I have picked in TradingView so that you can understand more. Okay. Yeah. Okay, so here's the trade that I picked for you. And remember, not every trade is always gonna hit, okay? And this strategy is strictly only traded in the New York time zone, which starts at 4:30 in Kenyan time. So I only traded at New York time. That's the only time I've tested it. So as you can see with this trade here, I picked this one. So what are we seeing from the explanation I made last time? You can see there's a high over here, and there's another high on this other blue arrow that I picked. As you can see, this green as you can see, this green movement up, this green trend upwards over here broke these two highs over here, this one and this one. This move up here broke this high and this high over here. So that's the first confluence. But make sure you check for the news before you look, because there could be news at this time, So after you see that, you also see something like this 200 EMA over here. This 200 EMA over here. This 200 SMA, sorry. The market is above, so it means the market is like is most likely to go on like upwards trend. You see, market's most likely going to go on an upwards trend. This is the 50 EMA, and you see, the 50 EMA is also, the market is also above the 50 EMA. So yeah, so after you see that, you come back, as I said, you draw your zone, this box over here. Take this, draw it to the previous candle, the previous red. This is the previous red candle, and since this is a demand zone, this becomes your demand zone because the market is on an upward trend. You see, when the highs here, when the market breaks the highs, it means the trend is going up. You see, so you need to look for demand zone, and this is a demand zone. The other one is called the supply zone. That's why the strategy is called supply and demand. So you see this here. This is the red candle here. So you just draw your zone over there, and you wait for the market to come back. As you can see, the market over here. See, the market over here went up and came back to your zone. And what was the first candle that came to your zone? The first candle that came to your zone was this candle over here. This was the first candle that dipped in your zone. This one here with the long wick. So when you see that, you wait for the second candle, as I said. Wait for the second candle, and the second candle is this one here. This one here. This one here, over here. This one. So when the market actually engulfing it just means it goes above this other candle. You take your trade. You take your trade somewhere. You take your trade somewhere here. Let me use this. You take your trade. You take your trade somewhere here. See, I actually marked it with that yellow line. So you actually take your trade here. And this yellow line after the market has on this side. On this. Wait, sorry. On this yellow line over here, and you can take like a 1-to-1 risk to reward. That's the one that always hits. But if you have more appetite for more risk, you can always take like a 1-2 or 1-to-3. But the 1-1 is the most likely to hit. So you see, the market came and it went to let me check the risk to reward. So let's say you entered your trade over here, as I marked it with that yellow line. You take and always place your stop loss just below the zone, just like a peep away below the zone, or just a peep away from the zone. So as you can see here, the market went up to, let's say it went up to a 1-to-2 risk to reward ratio. As you can see here, 2.212. That means you're making good money. If you have good lot sizes, you make good money. But you see, even the 1-to-1 hit over here somewhere, that one always hits. It's the easiest one to hit. So you see, the trade is that simple. And if you need more explanation or anything, I'll also drop like a more detailed video. So try this on the 430. Let me show you on the New York, and you can also try it on a demo, because remember, there's no 100% strategy. So yeah, you can see here 4:30 Kenyan time. That is the UTC +3. UTC +3 is our time zone here. So as you can see here, it starts at 4:30. That's when the New York opens here. The New York trading session opens here. And this strategy, I've tried it on Forex pairs, and but the Forex pairs, I don't do them as much, as because they're really slow. I stopped trading like Forex pairs. They're really slow. So I use this strategy. It works on anything, actually. It works on metals, oils, indices. I like trading like gold on this at the New York time. You can also try it on London. It hits on London. Okay, this is just a take your money and go strategy. So yeah, what am I missing? So yeah, so you can rewatch this video and get like a more understanding. But yeah, that's it. Like and sub, and more coming on my trading strategies and what I like, what I use. Yeah, you can also stress test this strategy on your own and understand it. Apply your own variations to it. Just tweak it a little bit. And yeah. So like and sub, and see you in the next video. Notes. Peace out.